This morning we see stocks turning lower and gold spiking up at the time of recording this video. Same thing with the dollar making a push higher, and oil prices are on the move. Let's take a look at all of these markets and talk about trading setups occurring now. Starting out, we can take a look at the S&P 500, which is above its all-time highs here that we put back in February. And it does seem like the stock market has had an impressive rally from the lows that we saw in April. But the question now becomes, is this market move a little bit stretched? Are we seeing the recovery trade having kind of already played out, and is there more juice for this thing to continue to push higher? Well, when it comes to the S&P 500's reading on the EdgeFinder, we are still getting a bullish confirmation. So what does this actually mean? If the EdgeFinder's top setups algorithm, which considers sentiment, technical, and economic data, is suggesting bullishness, does that mean I go out and buy the S&P right now? Well, the answer is no, because I actually think that the technicals here are sort of a headwind, if you will. I think that prices become a little bit stretched. We had a really big winning streak, and following the national holiday here in the US of last week, where kind of everything floated high above or ahead of that, I do think that we're probably due for a little bit of a pullback, and I would actually be more interested in being bullish if we saw a pullback to like the 6,100 level, the previous all-time highs. So I'm looking for possible longs if we do get pullbacks to add to my existing sort of positioning in the stock market. I do have several stocks long, as well as a position on the Russell, which I'll show you now. The Russell 2000 is a small cap index here in the United States. It is smaller companies, and a lot of them representing kind of the broad-based US stock market and US economy in many ways. I bought this one back a few weeks ago and have been trailing stops steadily since then. I trailed stops below this structure point, below here, and now I've moved my stops here. My plan for this one is to continue to trail stops as long as we put in some sort of higher low and higher high sequence, essentially allowing me to have a potentially uncapped or unlimited profit potential if this continues to push higher. I'm trading the ETF IWM, which as a US trader, I do not have the option to trade CFDs like NAS 100 and XAU USD due to regulations in my country. So I actually trade IWM on the stock exchange, which is an ETF that represents the Russell 2000 ETF. And I've trailed my stop loss here. We're floating a really nice profit on this position, and it has become my biggest winner of the year. My plan with this one is, like I said, to do the same thing, to trail stop loss further anytime we get any sort of significant higher low and higher high in the market. Next up, we'll take a look at gold, which I'm sort of neutral, but in a bullish position. Let me explain why. On the geopolitical front, things have really cooled off, specifically with Iran and Israel, which was sort of a story or a concern for the market a few weeks ago. It is mostly, for now at least, we've seen a ceasefire, and let's again hope for the best in that regards, that continues. But geopolitically, that risk here has sort of calmed down a little bit. However, while that is technically a bearish thing for gold prices, I do think a bullish thing for gold prices is the prospect of rate cuts in 2025. I do think that the Fed will cut interest rates probably in September, and that could be a tailwind for metals, as a weaker dollar could reflect higher prices for gold and silver. So while we're in consolidation right now, I was able to pick up a long position at the bottom end of this range that we've been stuck in, and decided to go ahead and put a long position on with a stop loss below market structure lows. At the time, this was also an EdgeFinder top setups, which added further confirmation to my trade idea. I'm long the ETF GLD with a very small position, just 80 shares long, and if this thing does break down through the lows, I'll just stop out for a small loss. Currently, the EdgeFinder is giving gold a neutral reading, so I probably won't be adding any new positioning to gold at this time. Here's a look at some of the stronger readings on the top setups right now, which would be trades that I'm more interested in potentially getting long or short on a particular asset. So for example, we have the DAX, Euro Dollar, Euro CAD, Euro Aussie, NASDAQ, Euro Pound, Swiss Yen, Chinese stocks, Euro Yen, the Nikkei, which is Japanese stocks, the S&P, Dow Jones, Kiwi Yen, and Kiwi Dollar. All of these getting bullish readings, and would mean that if the right setup occurs on the technical side, I could potentially add to these trades or look to establish new positions. On the bearish side, we have the dollar against the South African rand, the Canadian dollar versus Swiss franc, dollar yen, yen, Aussie Swiss, pound Swiss, dollar Swiss. And just a heads up, the EdgeFinder is currently at its biggest discount price of the entire year. We're offering 40% off the tool, and it is a one-time payment to get access to the product. And if you have additional questions or you'd like an even bigger discount, we're offering an extra 5% off for a total of 45% off the lifetime price by sending a direct message using the first link in the description down below this video. Just let us know you were watching the video today and you heard about the 45% off discount and you'd like to see the offer details, and someone from our support team will happily do that. Like I said, it's the first link in the description down below. Don't miss your chance to pick up a copy of the EdgeFinder at a low price. So I mentioned a second ago that euro dollar is getting a bullish setup on the EdgeFinder, which would be interesting to me if we do get a couple more days to the downside, perhaps a move back to 1.16 or a retracement down to 1.145 would be an area where I could potentially establish a long positioning on the currency pair. But currently price looks a little bit stretched to the upside. While we're talking about major currency pairs, we can also take a look at the pound dollar. Seems to be finding support at this level currently. Dollar yen is breaking out here to the upside, and I do think that this one may have some room to push to the upper limits around 148, but at which point I'd be more on the bearish side of this pair. Dollar Swiss franc is also trying to stage a little bit of a bounce here, but I would say that you probably have heavy resistance around this 81 level. Dollar CAD is also a pair that I would lean more bearish on if we did get a rally up into 1.3850. And the Australian dollar pulling back here today doesn't seem like it's able to find too much support, at least right now, around this 65.15 level that we're currently sitting at, but we'll see how price closes today. If you get a closure with a long wick on the bottom, that could suggest that the Australian dollar may have more upside against the US dollar, but it's also the Kiwi dollar that is getting hit hard today. So I do like these currencies against the dollar, but would prefer to be, I'd be more interested in picking up a long position if you get a push down to the bottom end of this range around 58.60. Euro yen is also a bullish setup on the EdgeFinder, and this thing is absolutely rocketing higher here. I can't really touch this one, but it's a really strong trade for those who are in it, maybe trailing stops or taking partial profits. Congrats if you're in that move. For me personally, if I was to get long the euro yen, it would be on a retracement all the way down to like something like 164. So 165, 164, really nowhere near a level that I can actually justify getting long on this currency pair. But euro yen is getting a +7 score, so congrats to anyone who caught that move on the EdgeFinder. Another one that I'm very interested in is getting back into potentially my Kiwi yen trade, which did have a slight move lower here today. If we take a look at NZD JPY, check this one out. You can see we initially shot lower, but price has already rebounded here and still just sitting at this resistance point. I'd be interested in either a break and retest of this level, something like this, or a retracement down to the 86 level to potentially start another long position. Taking a look at silver, this one still looks very fundamentally attractive to me in terms of the rate cut story, but currently EdgeFinder's giving it a neutral reading, so probably not a trade for me at this time. However, technicals do still seem to favor upside, as this looks like a bit of a bull flag in formation. Oil prices are higher here today off of this 66 level of support. I don't really have a strong bias one way or the other on this one, but technicals, in my view, still favor the upside. And yields are moving higher here, perhaps following that jobs report number that we got last Friday. The bond market may be suggesting that we're not going to get as many rate cuts as we previously thought. Taking a look at the U.S. economic heat map, you can see that the dollar is back into neutral territory following last week's jobs report. The 147,000 jobs added to the U.S. economy were better than expected by a pretty wide margin. And this is both bullish for the stock market and bullish for the currency, because I do think that what this suggests is that the Federal Reserve can still cut interest rates due to cooling inflation, but they don't need to do so in a hurry, which suggests a resilient economy but cooling inflation, which is a bit of a Goldilocks environment, in which case I still think stocks can push higher, and the dollar remains a little bit strong because less rate cuts generally favor a more bullish currency. Job openings last week were also way better than expected, and the jobless claims that came out last week were also better than expected. Unemployment rate also went from 4.3% down to 4.1%, suggesting very strong employment is still the norm here in the United States. And speaking of Goldilocks, we also got, in some ways, a really good number out of the wage growth year over year, which went from 3.9% down to 3.7%. Now, obviously, people getting less wage growth is not particularly good for the individuals, but from an economic standpoint, the overall economy, of course, likes the idea of less inflation inflation, and less wage growth does suggest a little bit less inflation could come from people getting bigger paychecks. Remember that when people get bigger paychecks, they typically go out and spend more money, which can drive inflation. So while 3.7% is still a good annual wage growth for United States citizens, it's also a good number that's not suggesting a bunch of inflation could come from it either. We will get more CPI numbers pretty soon. I believe it's next week or the week after. You're going to get your fresh round of CPI. Let's see where that number goes next. We went from 2.3 previously up to 2.4%. Let's see if we can get that number a little bit closer to that 2% target. We also lately got our latest round of PMI numbers. We had manufacturing PMIs, which came in better than expected, and services PMIs, which came in exactly in line with expectations. Of course, this giving us a bullish impact for the US dollar and for stocks under the manufacturing component, and a neutral reading for stocks and currency based on the as expected reading. So feeling very neutral about the US dollar at this time. I'm not looking to get a huge long position established on the dollar or a huge short position. I'm waiting for some more clarity, perhaps in the CPI report, to give us a more decisive direction. If you get a hot CPI print, the dollar looks really strong all of a sudden. But it is too soon to try and analyze that, and that's why we rely on looking at the data and tracking it using our software in order to stay up to date with what's happening. Of course, if you're an EdgeFinder user, you can repeat this process for all of the major economies. For example, Europe, or if you want to take a look at the UK, we can do all of them here within the EdgeFinder's economic heat maps tools. And like I mentioned earlier, we're doing 45% off for limited time. First link in the description below. All right, man, let's make a bet. Whoever gets funded first, the other person has to pay him $100. All right, I'm down. Sweet. With my new fair value gap, triple witching timing strategy, you stand no chance. Okay, I just got funded. What? How? We just started. With Maven's new instant funding program, you can get funded for just as little as $19. They offer some of the best industry pricing, fast payouts, and you can trade pretty much anything on their prop firm. If you'd like to check out Maven's instant funding program, the link and information can be found in the description below. You owe me $100, man. Come on, man, that's not even fair. And following up on that jobs data, what we saw in the 30th of July, or for the 30th of July meeting, is the probabilities for a rate cut really went out of the window. Now we see probabilities for rates to stay steady at 95%. And if we go out to September, the probabilities for a rate cut then start to become the majority. So it does seem like a rate cut in September is the likely scenario. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.